Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's update our view on euro currency. Situation here becomes more interesting week by week. So actually, as you can see, reaction on the gross domestic product release was mixed, although the data was at first glance not really bad. So it was a bit better than expected numbers, although it is less than in the second quarter, but this was broadly anticipated that this should happen. The consumption in the United States stands on the record levels with the decades, so everything is good, but at the same time, as I said, take a look at the price consumption index. So on the consumption expenditures, inflation, and it was worse than expected. So inflation, guys, right now is a major indicator. So as in the non-farm payrolls release, the wage inflation is most important, even more important than the numbers of the payrolls. As on the gross domestic product, right now, the two important inputs in parts of this indicator is inflation, the PCE inflation, that major indicator for the Fed, and it was significantly less than expected. It's below the 2%. The core consumption expenditures were below the expectation, below the 2%. And second is the export. So we'll take a look at the export in the United States. You will see that it was a big contraction due to the restrictions on the soybeans export because of the tariff spiking with China. And this report, guys, was important because that is first statistical confirmation of the problems and impact on the United States economy of the tariffs. And this is first a real confirmation. So previously it was just some announcement in analysis tools, and analysis tell about this in the mass media, on the TV, that these problems will happen and so on. But currently the statistics confirms the reducing of the export, and that is very important. As a result, as you can see on the euro, reaction was to the downside, but it was not really very long term, and very soon market turns in the opposite direction. So it doesn't mean that in euro currency everything in Europe stands everything good and some positive shifts have happened. Absolutely not. The currency stands stable because of the new problems in the United States, but not because of the improvement in Europe. In the longer term perspective, situation currently is not very encouraging, and if you will read our report, you will see that there's a sentiment stands not really very positive in relation to the euro. Yes, technical picture in long term doesn't look really very bullish, but in the shorter term perspective, we have some patterns, some setups that lets us trying to take the long position. Another reason why we could do this is because we stand very close to the invalidation point, very close to the previous lows. So actually, we will try to buy against the recent lows. Some technical patterns that we have, guys, let market to move slightly higher, at least to the 1460 area, which should be enough for us to move our stops to the break-even. Then we'll see what effect will be, whether market will be able to hold here and reverse situation up. At least we will be protected by the break-even stop, and we'll be able to relax and just see what will happen. What background for this trade we have? First of all, we have the bullish grabber on the weekly chart, so you will see it if you will read our weekly report. On the daily, it's also some bullish moments exist. First of all, market stands close around our COP target, and no downward action has happened. Also, we're having kind of the bullish engulfing pattern. It's not very bright, not very pure, not as this one, but still, it's kind of the engulfing action stands. We're at the lower border of the falling wedge, and the falling wedge by itself indicates this housing of the bearish pressure. Sometimes it happens that wedges are breaking miserably to the downside, so the acceleration. But in most cases, which triggers some upward retracement, upward dip action. In our situation, we will be watching for just minor bounce. It's our first stage in our trade, trying to get the minor bounce up, at least to the upper border of the wedge, and protect our position with the break-even stop. And after that, we will see what to do, because potentially, since we have the engulfing pattern on we have the grabber on the weekly, potentially it could be the action about the 118 even, and it could be the double bottom. But this is a bit longer perspective. We are mostly currently interested in focus on the entry process rather than the planning of some extended targets. So our task here is to get the position. Invalidation point will be below these lows. So if market will drop lower and starting dropping, in this case our scenario will fail. On the 4-hour time frame chart, we have some other tools that suggest at least minor retracement. First of all, we have the ABCD completion points, OP, kind of the Russian risk can happen here. So it suggests bounce to the 114.45, at least 30% retracement of the AB pattern. The same with the butterfly. So our 1618 butterfly has been completed. This market stands in upward direction here. Also, we have here another bullish engulfing of these Russian rings. So I think the chances are not really bad. Probably market could show at least one more leg up. It's really high probability that this will happen. So how we will play this? On the hourly chart, guys, we have kind of the potential for reverse hand and shoulders pattern because the stop stands at 1618 extension of the previous retracement. We have the upward rally. And take a look. On the hourly chart, the last candle on the week was the reversal one, bearish reversal. It means that the retracement down will start. This could be two possible downside targets, either 50% support, 1377, or slightly lower to 618 support, it's 1360 approximately. These two levels we'll be watching for potential taking the long position. It would be perfect if we will get the kind of regardless triple to buy or something of that sort. So that is potentially the area where the bottom of the right arm should appear. If it will happen indeed, so our risk will be, well, approximately 35-40 pips, which I think not really big, not really large amount of the risk. But if we suggest that upward action will start, minimal targets suggest the action to somewhere 1445, 1460, it's approximately 100 pips potential to the upside. So it's acceptable risk-reward ratio. Another advantage is this we will stand very close to the invalidation point. So I think that we could try to do this. And then we will see what to do next. It will depend on the price action that we will get in the beginning of the next week.